Who does this? Business trip, only sit economy class. Pantry, no more snacks. Toilet paper, 1 ply instead of 2. And last but not least, if you're looking for tea in the pantry, no more TWG, only Lipton tea. This company is none other than Sea Ltd. They've gone through drastic changes, and as you can see over here, they've posted their second profitable quarter in a row with $87.3 million profit. And although there was a slight drop from first quarter, it is still nonetheless a reversal from the many years of losses. However, if you see the stock market's performance, you would realize that they have crashed in the share price by 17% just in a single day after releasing these results. So if you are a Sea Ltd shareholder, or if you're thinking of investing in Sea Ltd, I think I have something interesting prepared for you. Continue watching on. If you're new to Sea Ltd, maybe let's go through a quick breakdown so that you can grasp what are the various moving parts of this fantastic company. Sea Ltd is made out of 3 key segments. The first is Shopee. I'm sure you know Shopee, right? Especially if you're in Southeast Asia or in Singapore. My wife buys all the diapers and baby wipes, everything from Shopee. I think they have dominance, in my opinion at least. Then second part about Sea Ltd is actually their digital entertainment, which is actually Garena. I don't play games, so what I can share with you is from what I read. If you are an expert gamer, you kind of know where they stand in terms of the gaming arena. Last but not least, they have digital financial services, which is Sea Money. In Singapore, they've won one of the 2 full banking license for digital bank, but I haven't seen them make too much of a splash in Singapore. But later, I'll cover a bit more on what you need to know for this market segment. So without further ado, let me share with you the key problems as to why Sea Ltd's share price has been that awful over the last 2 years. Of course, at one point of time in 2020, Sea Ltd was one of the best performing stocks listed on New York Stock Exchange. But having said that, they seem to have passed their massive growth period, and right now they are riding the boat and trying to turn profitable. But I guess where the problems come from this first part, which is actually Garena. Garena is the digital entertainment whereby they actually own a very popular game called Free Fire. Now, Garena's profits in previous years were used to feed Shopee's expansion because Shopee actually paid a lot of advertisement, correct? At one point of time, they actually signed on Cristiano Ronaldo. And all this expense needs to come from somewhere, and it actually came from Garena. As you can see in 2020, 2021, where we had a pandemic lockdown, everybody was playing more games, and they actually clocked a rapid increment in quarterly active users. The quarterly paying users also skyrocketed, and as you can guess, games, they don't need a lot of maintenance costs, which means they are highly profitable. Now, I used to think Garena would be a cash cow for Sea Ltd to milk monies so that they can pay for their other rapidly growing segments, correct? But what do we know past the pandemic? We would realize that right now Garena is showing a big decline. Bookings have dropped rapidly. If you compare 1 year ago, it was almost double. Quarterly active users seem to be dropping also. Quarterly paying user ratio has definitely dropped. So why is this the case? One reason is that Free Fire, which is their top product, was actually banned in India, for example. There were no specific reasons, but the app was allegedly engaged in activities prejudicial to sovereignty and integrity of the country, posing serious threat to India. I guess this is just a very fancy name of saying that they don't want surveillance, especially when they feel Tencent is a backer of Garena, and that there could be some surveillance from Chinese government. Then the other part could also be, games, they have a life cycle. You can't keep playing the same game for 10 years. So usually it peaks out after a couple of years and then starts to decay as people look for something new to play. So a gaming company would always need to refill their funnel of games because as one game matures, hopefully they can migrate audiences to the next game and continue to make monies from them. And what I read from a transcript is that at least Free Fire, which has been declining for months, has finally seen some revival. They seem to have tweaked and engaged their user community a bit more. And not just that, their second largest game, Arena of Valor, is showing strong performance. Last but not least, they've mentioned a healthy pipeline of new titles coming up in the next few months, whereby one of their games, Undawn, has actually opened for pre-registration. So hopefully all this means that this decline in revenue and profits from Garena would eventually reverse back up and start making more profits. If not, market is going to punish, especially if earnings from this segment continue to deteriorate. It's quite obvious, at least to me now, that digital entertainment is not a cash cow. It's not like recurring revenues. It's actually more of a cyclical business. You have a winning title, you shoot up, and this limelight is hard to sustain unless you have new record titles. So with that, let's move on to the key segment of Sea Ltd, which is Shopee. And before I get there, if I do, smash the like button and press the subscribe, especially if you have benefited from some of the sharing already and you have found some insights useful for you to consider being an investor. So here it goes. Shopee's numbers look good on paper. 46% year-on-year GAAP marketplace revenue growth. But the problem is this. When we see headlines and such titles, we kind of not realize that 1 year ago, it was still on the ascending phase. Right now, market is reevaluating it because they are not sure how much is declining. So is there actually stagnation in sales? We would realize that if we compare 4th quarter 2022 and 1st quarter 2023, there seems to be so in my opinion. The numbers in Shopee was 1.8 billion US dollars. Right now, it's still 1.8 billion US dollars. Previously, Shopee used to mention gross merchandise value, GMV, which actually measures the total products sold. In 4th quarter 2022, it was mentioned that this gross order seemed to be declining also. And the latest GMV was 18 billion US dollar, total merchandise value sold. But right now in 1st quarter 2023, I can't even see this displayed out transparently. Could it be cost-cutting measures? I don't know the reason, but some people might also say that even though this number is stagnating, it's also okay because Shopee is not throwing more advertisement costs. It's pulling back on advertisement budget already. And so far, no loss in sales, so not too bad. But my rebuttal to that is, advertisement is like drug like that. You give and then there's lasting effect for a couple of months. Good feeling like Panadol, you feel good. But then we need to be sure that we are off that drug for it to be consistent measured profits. And if you're curious to see some numbers in terms of expense cut, this summary table here explains the picture fully. Sales and marketing expenses have dropped tremendously by $600 million. No more Cristiano Ronaldo advertisement. General and administrative expenses have also stagnated. This is a drop from quarter to quarter. And I guess one of the reasons is that Sea Ltd has actually frozen pay and been very prudent in terms of their hiring. They've actually laid off staff also. The only thing that's increased in terms of expenses is this research and development. And from an investor standpoint, it's actually not too good to keep reducing on R&D because you need the business to be competitive. Maybe they do need R&D in terms of games to churn out more profits. But for the e-commerce platform, I guess there isn't too much of R&D needed. But what is the biggest problem in e-commerce? I think quite obviously is actually competition. Right now, actually on TikTok, there seems to be a lot of sales. I'm actually playing a bit more on TikTok to discover what exactly is TikTok Shop about. I'll actually be doing a future episode on my experience on TikTok Shop, so do subscribe, do stay tuned for that sharing. Because I see a lot of millennials and Gen Zs gravitating towards TikTok Shop to buy products, and right now they have a lot of discount coupons. So it's actually not hard to imagine that Shopee would face competition from a new big player, which is actually TikTok. Then is this competition global? Is this slowdown global? Is e-commerce, past its peak? I think that's a question that I was also curious about, and I've actually found something interesting to keep in mind. This company is actually Mercado Libre. They are a dominant player in South America. You can see them as the Sea Ltd in South America. They are actually still growing. As you can see, Argentina's GMV, Brazil's GMV, Mexico's GMV have all increased, which suggests that there's more and more e-commerce transaction in Latin America itself. So it's actually not true that everybody is suffering. If you see in terms of share price, Mercado Libre has outperformed Sea Ltd massively in the last 1 year itself, being the blue line and Sea Ltd being the yellow line. Now, if you'd like to find more information about these companies, check out Seeking Alpha. I'll leave links below. I did a lot of this research, reading other people's opinions, bullish and bearish ones. I use the platform to compare against competitors and also found transcripts on the platform. I'm very used to doing Singapore research, and for international research, I'm getting a lot of value from this platform. We can actually see transcript that Indonesia is Sea Ltd's biggest market. Brazil is a lot in focus, especially for expansion. And that's where I'll also be monitoring Sea Ltd's developments in the next few quarters ahead. Now, everything I've mentioned so far seems to be very negative, correct? But I would like to end things, giving a balanced point of view. There is one bright spark in Sea Ltd, which is actually quite obviously Sea Money. Sea Money is digital bank. Loans have increased. As you can see this chart over here, year on year, 75% growth. And non-performing loans still remain at 2%. It's quite obvious that digital financial services could overtake Garena to be the second growth arm of Sea Ltd, especially if Garena doesn't revive its fortunes in the coming quarters ahead. I'd like to mention positively about Sea Ltd's founder Forrest Li, because I do remember back 2 years ago in 2021, they actually secured massive funding by selling shares at $318 a piece, bringing in $6 billion of cash. Now, this has saved the company massively, and I'd like to give him that benefit of foresight, because he realized that the company might need cash, and he actually sold out shares on the high. Not just that, his actions in this last 1-2 years suggest a very astute businessman, in my opinion, freezing pay firstly, laying off staff next, and then now signaling to staff and the market that everything is okay by raising pay by 5%, as you can see in this article over here. A lot of times when we buy high growth companies, we are betting on the founders. And I think in Singapore, there are few that are better than him. Let me know your thoughts and if you agree on the assessment. As always, leave them in the comment sections, and thank you for watching to the very end. With that, I'd like to invite you to one of my previous deep dive on the stock. This is actually my high growth pick for 2023. If you haven't seen it, check that out. It might surprise you who they are. It does sound from here, and see you there. Take care as always. Goodbye.